Good morning, everybody. Hey, welcome to Money Monday. This is Rick Kaufman with LMA Trading, like-minded adults, as I always like to say. Got my coffee here Monday, and this is take two. Haven't had enough coffee yet here this morning. It's about 7:28, or I'm sorry, 6:28 here in the morning, and I recorded my first session and forgot to turn the freaking microphone on. So we'll see if we get it right this time. According to the lights and everything, we should be good. So, um, well, got to start off by saying, what do you guys think of the end of the markets on Friday? Or for that matter, the markets for the last week? Oh boy, I tell you what, if you were like me, I'm sure you probably were thankful for the weekend coming. Maybe things will cool off, kind of recollect yourself, enjoy the weekend, enjoy family, enjoy all those things you do, and come back ready to get at it on Monday. Well, that's what we're going to look at. And before we do, let's get into a little bit of housekeeping here, as always. So, just a few disclaimers. I'm not a financial advisor, nor is any of this any kind of financial advice. I am not suggesting you take or follow anything that I'm saying here. This is part of my trade journey, part of my trade journal. This is for my own personal education, for me to review what I see in the mornings and how the markets will play out to help me devise my trade plan for the day. And so stocks and options have risk and they're not suitable for everyone. I understand I'm trading my own money and I can lose every penny. I'm an older trader, so I'm a rather risk adverse trader. I've got a small account and a larger account. I'm not trading with any huge sums of money. And so I look at probabilities, and the higher the probability, the better off that I like. I do like the SPX trade systems. I like credit spreads, and I do play debit spreads, and I do use puts and calls and from time to time. And but overall, try to play the trend, and the trend is my friend. And right now, as I look at the markets, what in the world is the trend? So we're going to try to answer that here today. But before we do, I am in the process. Make sure you click the like button and also subscribe, or check back with us on here maybe next week or the next couple of weeks, because I am currently working on a back test on an XPX trade, basically a 1 DTE, so 1 day to expiration. Not necessarily a day trade, but just putting a trade on and to 1 day before expiration, and to pull out my goal here is to show an income to pull out $3,000 a month, $36,000 a year, while growing my account. And we'll be using the on-demand feature of the toss, and but we'll be trading it like we're trading roughly a $10,000 account. So even though it's $100,000 on the on demand, we're going to be trading like it's a $10,000 account, and see if we can pull out a certain amount of income, and understanding that, with what we're putting on risk on a trade. So we'll be looking at $5 wide spreads. We'll be looking at $10 and $15 wide spreads, and selling the anywhere from the 50 delta to the 45 delta. So we'll be looking at that at the money, or just out of the money, and then buying back that option at either a five, 10, or $15 wide on that. So like I said, make sure you subscribe so you can hear a little bit more about that. I'll have a lot of data. I'll show equity curves. I'll keep track of the trades and show you exactly how we did on that. So here we go. Let's go ahead and let's jump into this right here. And as you can see, the markets last week were pretty ugly. When we look at the daily charts of the Qs, the YMs, the Russell, and the S&P, for the most part, the Qs have pulled back on the daily to the 21, which is the white line here on my Keltner channels. So we've kind of are catching a bounce at the mean. The YM is catching a bounce at the -2 ATR. It's up 226 points. So we are getting quite the bounce here in pre-market. We have volatility and spiked up on Friday, and we'll talk about the VIX here a little bit, but we've got decreasing volatility this morning, but it's still high above the 18. And so, the cash session, we may see a move to the upside on this. Now, with that being said, I don't know what the market's going to do. We have the SPX roll, the index roll taking place till Friday this week. That's what brought this really nasty candle in on us on Friday. So let's go ahead and jump in on the Dow on our charts, and let's take a look at what we're looking at here. The Dow still is in a very strong weekly bullish trend. It's above the 21. It's catching support on the weekly 21. It's pulled back. It's probably pulled back more than the others. And so when I look at on the daily chart, when I look and I put my drawing tool from the low to the high here, it's pulled back about 2.88%. So still not a 5% pullback or not even a 10%. So, which is in line. It's a little deeper pullback than what we've seen on this for a while. And but we have a weekly squeeze, and the weekly squeeze, I put the Bollinger Bands on here. So on our weekly and daily chart, those are the light blue. I have a 2 ATR and a 3 ATR Bollinger Band. They are flat, or actually kind of condensing in, which is showing a pretty tight range on a squeeze. So probably looking at this here to maybe catch a dead cat bounce. I'm going to be very, very cautious here. I see this as a potential suck me in, take my money, algorithm here to only bring in the buy the dip buyers to flush us out and take our money. So I'm going to be very, very cautious here. I don't want to see this probably get back above the daily 50 before I would even turn around and feel comfortable with this. And then on the daily trend, we need to get back above the 21 on the daily. I don't think it's going to get there today, but we'll see how the rest of the week plays out. And we'll be watching the VIX very closely. Let's take a look at the Russell. The Russell here, my friends, is again is a very bullish on the weekly. Bearish on the weekly. We have a very tight Bollinger Band. We've been in a weekly squeeze for about 3 months here, and since May, longer than that, probably 3-4 months, we've been squeezing in a very tight range here, and the Bollinger Bands on the weekly trend do not look to be giving that up here at all. On the daily, we did open up, but we've kind of leveled off. So this is a very deciding factor. Long-term trend here, we've got a buy signal here, but we're losing some momentum on that due to the weekly squeeze, and so that's going to probably be dictating the long-term trend. On the daily, we've got a sell signal here that started firing the beginning of that last week, and on the high here at the 2 ATR, and it's pulling back. And so that's what I'm looking at here. I'll also be looking at the short-term trends. We have here on the Russell, we're closing in close to the 2 ATR, 3 ATR on the 30-minute. Overnight we had a 30-minute squeeze for a few bars, and we got a buy signal. We've got a buy signal on the 2-hour and a buy signal on the 4-hour. So we may see a pop on this here this morning, only for this to lose steam and level off, and we may close in the green, but I don't know if we're going to get it back above the support of 2260 or this resistance. So this is going to be a pretty tight, it's got to get back above that for me to have any faith in the Russell. And I do have a short on the Russell. I did put it on Friday. So we're going to be in the red on that here today. But, whether or not, I'm going to wait and see how the cash session shakes out and see what we do about that, whether or not to keep that in place or let it go. It's basically a 1-to-1 on a credit spread. So I'm risking like 250 to make 250. So that's something I can live with. And just to have a little something there for today and tomorrow, possibly. Anyhow, let's move forward. Let's take a look at the VIX. We were talking about the VIX, but I'm going to be watching the VIX very, very closely here. And I want to go over to my daily chart here, my longer term daily chart on the VIX, and close in on this here. And this candle right here, this was Friday. Friday, the markets made a push. Looked like they were going to close kind of flat, maybe possibly just a little bit green on the day, but they got it back above the last hour. Most of this was put in the last hour or so of the day and just ripped in our faces. I closed a couple positions early on in the morning when we got this spike up here. I closed my position on Home Depot for a nice profit. I think around a 73. Let's see, it was about 73% return. So that was a good trade. We took it on back here when the VIX was much lower, and so we got we got in at a good time, and so we made a pretty decent profit on that. And then we did close out our data dog on a short term on this rip in our faces. The chart on the data dog was just, it was a squeeze, and we got a little bit on the high end. So I with the SPX roll and the index roll, I didn't have a whole lot of faith of that possibly holding up. So I took a small loss. Overall, it was it's still a net gain between the two that I felt very comfortable with. And we were looking really strong into the end of the week, or into the last few hours. And our Crocs position, we have a McDonald's position. We also have a Starbucks position. And those were all looking really, really good. And we gave back most of the gains on our week, but we still finished in the green on Friday. So all in all, it wasn't a bad day. So looks like we may recover some of our losses that we saw on Friday as of right now. So I'll be looking at potential areas to take profit here today while I keep a really close eye on the VIX with the SPX roll that's going on, taking place. I talked about this. If you're not sure what I'm talking about, go back and watch Friday's video. I talked a little bit about this. I gave you the link for that. So it comes around every 90 days where they've got to roll their contracts. So the big funds are rolling the contracts. So we're going to see these spikes to the downside, most likely on and off here throughout the rest of this week. So cash is a position. I'm going to remind myself that this could all just be a fake out, and this could all be something that's going to suck us in, and then it's going to rip in our faces and take our money. So I'm going to remind myself not to get emotional and remember that cash is a position, and to, maybe look at my cash position as a hedge, because I can't lose if I'm not in the market, but at the same time I can't make money either. So we're going to be looking at that very, very closely, be watching that so we can take profits today. We're going to take some profits today and close out positions a little early, just to be a little bit on the safe side and lock some of that in for this week. So let's go ahead and jump into after looking at that, let's go ahead and jump into the SPX. The XPX is, as you can see here, is very, very bullish. It likes the 1 ATR as support on the weekly chart. And that's where we find ourselves right now, catching a little bit of a bounce. We have pulled back to the 21 on the SPX, and we don't really see it break too much of that structure until last year when we saw the coronavirus. We saw that. Other than that, it's held the 21 all the way up. So we've got more room to the downside from this standpoint, but it's been holding the 21. We do have a weekly sell that's in place. So we are seeing a decrease in momentum, and we may see this go a little lower this week, which all in all is not necessarily a bad thing. So might work in well, because then we can play all this to the upside, and while putting profits in our pockets. Trying to determine the direction on this is really, really tough. But right now, it looks like we're pulling back up to the 21. We're getting just above this 44.76, but that 44.80, we're going to call it, is going to be a key level of resistance, and it's also going to play a key level of support going into this. When I look at the short term, we had a buy signal fire overnight. We have a buy signal on the 2 hour and a buy signal on the 4 hour. So this is all indicating that we're going to see probably a higher open at the cash session, only for this to possibly lose momentum and steam, and possibly fade out throughout the day. And then if we see possibly an SPX, some of these contracts being rolled, we're going to see a drop in the markets. But again, this could hold up strong. The buyers, if the buyers come in real heavy after having this nice pullback, they see this as a great opportunity to buy the dip. We get enough buyers coming in, we may be able to hold off on anything that could happen, and we could just hold that level of support. That's what I'll be watching very, very closely today. And actually, for my positions I have on play right now, I hope that's what happens. But I'm going to be very cautious. Probably not going to play the SPX. If I did, I might play it on a 0 DTE, but that would be a day trade. And so I don't, on my small account and my larger account that I have, both of those are under the DTE. I have one other account that is over, but I would not be trading the SPX. That's my long-term money account. So we won't be playing that on here, because that's very, very secure stocks that don't move a whole lot, things like that. So anyways, with that being said, we will be keeping a close eye on this. And then lastly, let's jump into the Qs. The Qs are very, very bullish. Long term, we see here that it loves to hold the 21 as support, and also holds the negative or the positive 1 ATR on the Keltner channels. Our Bollinger Bands are flared open, which means that we're not getting a whole lot of pressure, but it's kind of leveled off here on the bottom here. So we might be seeing, the Qs getting some support. So getting some support here at the 21, and possibly the Bollinger Bands on the daily looks like it could be flared open just a bit here this morning, while they're curling up on the daily here on the bottom, making our support a little stronger. So I'll be watching this very, very closely. And then on our, very similar to the S&Ps, on where we got a buy signal on the 30-minute, and a buy signal on the 2 hour, and buy signal on the 4 hour. So looking very, very strong. But we are neutral on our stacked EMAs. So we're neutral. So we don't have stacked EMAs on our short-term intraday charts, but long-term chart we are stacked, and that's what really dictates the trend that I look at on how I'm going to play this. So as of right now, I'll be watching this very, very closely to see how we hold up throughout the day, or at least through the first half of the cash session. So we'll kind of let this shake out a little bit, because if the buyers come in and buy this dip up, and the algorithm kicks in and we get a flush, it's going to trigger a lot of stop losses, and we're going to see a relatively sharp decline later in the day. And that's what I'm most fearful of here on that. So I will probably be watching this very, very closely. And the other reason why I'll be looking at taking profits where I can. So, so my trade plan for today is this. I'll be watching the markets very closely while keeping my eye very closely on the VIX. If I see any spike in volatility up to the 20 line, if we don't break below the 18, but if we stay in this 18 to 20 range, then volatility is still a little on the high side. But so we could get a bounce and a flush back down. And so this could be really a fake out in the making. And I'm going to be very, very cautious on this to wait and see how this plays out. And so even though it looks like a solid green day, but we saw this on Friday, and Friday things, you look here on the Dow, we saw a huge candle. It looked like it was going to be a pretty good day, and it all ripped in our face. And I think we could have the same thing setting up here today, possibly, because the candles look identical in the wicks and the bottom of the tail and the body of the candle. They look very, very similar to one another. And so we could just be having more of the same. So we had a down week last week. Will we have more of the same this week? Well, it's hard to say. It's only Monday, and it's pre-market. What the real tale of how this market will play out will be in the cash session, and that's what that's what I'm going to be sitting on my hands and waiting to see how it plays out, and understanding that if I miss it today, that's fine, and then that gives me a little more confidence in what I may see going into tomorrow if the buying continues. So that being said, you guys have a great day. Make sure you click the like button, subscribe. As I said in the beginning, I have a back test on the SPX on a 1-day DTE. I will have a lot of data that I'll be sharing, some screenshots. I'll be also having the equity curve on that, showing how, were we able to grow the account, and while we were pulling some money out at the same time. And, that's, pulling out, $1,500 or $3,000 a month. So that's pulling out 30% of the account if I was trading a $10,000 account as an example. So that's the way I'll be trading it, putting, roughly 10% risk on the high end, but looking at playing those. And so roughly, somewhere in the neighborhood of 10 to 12 trades. So selling the put credit spreads and selling the call credit spreads and on the SPX. And while we add in some credit spreads on a couple stocks on long term to make up where we may lose on some of those trades. So with that being said, have an awesome Monday. Be safe, and we'll see you in tomorrow's video.